Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive stock analysis of Comcast Corporation, ticker CMCSA. If you're an investor looking to understand the ins and outs of this media and telecom giant, you're in the right place. We'll cover everything from financial performance to valuation, recent trends, and even an intrinsic value calculation to help you decide if this stock deserves a spot in your portfolio. So, grab a coffee, hit that like button, and let's get started. All right, let's set the stage. Comcast is a household name in the media and technology space, and I'm sure most of you have interacted with their services at some point, whether it's through Finity Internet, NBC Universal content, or even a trip to one of their theme parks. Today, we're not just skimming the surface. We're going to dissect their business model, financial health, and market position to give you a clear picture of whether CMCSA is a buy, hold, or sell. Stick with me as we break this down step by step. Let's start with the basics of who Comcast is. Founded in 1963 and headquartered in Philadelphia, Pennsylvania, Comcast Corporation is a global leader in media and technology. They operate through several key segments: cable communications under the Xfinity brand, which provides broadband, video, and voice services; media, which includes NBC Universal's broadcast and cable networks like NBC and USA Network; studios, producing film and TV content through Universal Pictures and DreamWorks Animation; and theme parks, with iconic destinations like Universal Studios. They've also got a growing streaming service, Peacock, which is making waves in the competitive streaming market. With a workforce of over 182,000 employees and a market cap of around $108 billion as of the latest data, Comcast is a heavyweight in the communication services sector. Their CEO, Brian L. Roberts, has been steering the ship for decades, and they've built a reputation for innovation and scale. But scale doesn't always mean smooth sailing, and we'll dig into the challenges they face shortly. Now, let's talk money, specifically Comcast's revenue streams. For the fiscal year 2024, Comcast reported total revenue of about $123.7 billion, a slight increase from $121.6 billion in 2023. Breaking this down by segment, their residential connectivity and platform segment is the cash cow, bringing in $81.3 billion, which includes broadband and video services under Xfinity. The media segment, driven by NBC Universal, contributed $28.1 billion, while studios added $11.1 billion. Theme parks, a standout performer recently, generated $8.6 billion, and business services connectivity brought in $9.7 billion. Geographically, the United States dominates with $96.2 billion in revenue, while Europe and the UK each contributed around $14.2 billion. What's interesting here is the diversity of revenue sources. Comcast isn't just a cable company anymore. They're a multifaceted entertainment and connectivity giant. However, not all segments are growing equally, and we'll touch on some concerning trends in broadband later. Let's move on to their latest earnings for Q4 2025, which were released recently and have been making headlines. Comcast reported earnings per share of 84 cents, beating the Zacks consensus estimate of 75 cents, though this is down from 96 in the same quarter last year. Revenue for the quarter increased 1.2% year over year, driven by strong performance in theme parks and Peacock, their streaming platform. However, they did miss on overall revenue expectations slightly, and adjusted net income took a hit. The bright spots? Theme parks and Peacock are showing serious momentum, with Peacock gaining traction in a crowded streaming market. On the flip side, broadband subscriber losses are deepening, and the studios segment underperformed. It's a mixed bag, folks, and while the earnings beat is encouraging, there are underlying issues that long-term investors need to keep an eye on. Diving into the Q4 2025 earnings call transcript, management provided some color on these results. They highlighted the strength in theme parks, attributing growth to new attractions and strong guest spending at Universal destinations. Peacock's subscriber growth and engagement were also a key talking point, with management optimistic about its role in their streaming strategy. However, they didn't shy away from the challenges in broadband, acknowledging intensified competition and customer losses, particularly in the residential segment. They're focusing on bundling services and improving customer experience to stem the tide, but it's clear this is a pressure point. Management also noted margin pressures in some areas, which could impact profitability if not addressed. Overall, the tone was cautiously optimistic. They're betting on growth in streaming and experiential businesses to offset traditional cable declines. All right, let's get into the nitty-gritty of Comcast's financial statements. Starting with the income statement for FY 2025, revenue came in at $123.7 billion, with a gross profit of $74.3 billion, reflecting a healthy gross margin of about 59%. Operating income was $20.7 billion, and net income reached $19.8 billion, translating to an EPS of $5.38, a significant jump from $4.07 in 2024. This shows solid profitability, with a net profit margin of around 18.3%. Moving to the balance sheet for FY 2024, the latest full-year data, total assets stood at $266.2 billion, with cash and equivalents at $7.3 billion. Total liabilities are high at $179.9 billion, leading to a debt-to-equity ratio of 1.02, which isn't alarming, but suggests they're leveraged. Shareholders' equity is $85.6 billion, providing a decent buffer. Looking at cash flow, operating cash flow for 2025 was a robust $33.6 billion, with free cash flow at $21.9 billion after $11.8 billion in capital expenditures. This free cash flow yield of nearly 20% is impressive and shows they've got room for dividends, buybacks, or reinvestment. However, with a current ratio of 0.88, liquidity is a bit tight, so they'll need to manage working capital carefully. Overall, the financials paint a picture of a company with strong cash generation, but some balance sheet risks due to debt. Now let's talk valuation. At the current price of $29.75, Comcast has a trailing PE ratio of 4.84, which is incredibly low compared to the industry average of 18.82 for telecommunications services. Their forward PE for 2025 is around 7.24, still suggesting the stock is undervalued relative to peers. The price-to-sales ratio is 0.86, indicating investors aren't paying a premium for revenue. Enterprise value stands at $196.2 billion, factoring in debt, and their dividend yield is a respectable 4.29%, appealing to income-focused investors. On the surface, CMCSA looks cheap, but low multiples can sometimes signal underlying issues like declining growth prospects or sector headwinds. Comparing this to the broader communication services sector, which has underperformed recently, Comcast's valuation seems attractive, but we'll test this with an intrinsic value analysis later. Let's break down Comcast's position using a SWOT analysis to understand their strengths, weaknesses, opportunities, and threats. Strengths: Comcast has stable revenue growth with a 1% year-over-year increase and a diversified business model spanning connectivity, media, studios, and theme parks. Their strong free cash flow of $21.9 billion in 2025 gives them financial flexibility for investments or shareholder returns. Brand power through NBC Universal and Universal Studios also provides a competitive edge. Weaknesses: broadband subscriber losses are a glaring issue, with competition intensifying from fiber and wireless providers. Margin pressures in some segments and a high debt load, evidenced by a debt-to-equity ratio of 1.02, could limit flexibility if economic conditions worsen. Opportunities: Peacock's growth offers a foothold in the booming streaming market, especially as traditional cable declines. Expansion in theme parks with strong recent performance could drive experiential revenue. Additionally, global expansion, particularly in Europe, presents untapped potential. Threats: intense competition in broadband and streaming, think AT&T, Verizon, Netflix, and Disney, poses a constant risk. Regulatory scrutiny in the telecom and media space could impact operations, and macroeconomic factors like inflation might dampen consumer spending on discretionary services like theme parks or premium content. This SWOT highlights that while Comcast has solid foundations, they're navigating a tricky transition from legacy cable to digital-first businesses. Let's take a look at Comcast's recent stock performance. Over the past week, CMCSA is up 2.66%, and over the last month, it's gained 5.95%. The 3-month performance shows an 8.89% increase, which is solid. However, zoom out and the picture gets uglier. down 8.46% over 6 months, 10.53% over the past year, and a whopping 40.68% over 5 years. That's a brutal long-term trend, underperforming both the broader market and the communication services sector, which is down just 14.23% over 5 years. Looking at the chart, the stock seems to be in a short-term uptrend, potentially forming a base around $28.30. For short-term traders, a break above $30 with volume could signal a move toward $32, but resistance looks strong there. Long-term, the downtrend is concerning. Investors are clearly skeptical about growth, and it's hard to argue with that sentiment given the 5-year performance. Now, let's get into the meat of long-term investing. Intrinsic value. I've run a discounted cash flow, DCF model, to estimate what Comcast is truly worth beyond market noise. I'm using a conservative growth rate of 3% for the next 5 years, reflecting broadband challenges but factoring in streaming and theme park upside. I've assumed a terminal growth rate of 2% in line with long-term GDP expectations and a discount rate of 8% to account for risk and opportunity cost. Starting with free cash flow of $21.9 billion from 2025, I've projected cash flows over a 10-year horizon, adjusting for capital expenditures and working capital needs. I've also factored in their debt and cash position to arrive at an equity value. After crunching the numbers, my DCF model suggests an intrinsic value of approximately $45 per share for CMCSA. At the current price of $29.75, this indicates the stock is undervalued by about 34%. This aligns with the low PE and forward PE ratios we discussed earlier. However, this assumes management can execute on streaming and stabilize broadband losses. Big ifs. If growth disappoints, the intrinsic value could drop closer to $35. For now, the model suggests there's a margin of safety at current levels, making CMCSA a potential value play for patient investors.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.